34.12 levels, 34.13 as we headed into the number. The dollar is holding below 93 still. And ladies and gentlemen, let's bring in Alan Nuckman, the Chief Market Strategist. He's joining us this morning from Agora Financial and here to help us take a look at some of the economic data. Alan, welcome. Retail sales came in a little bit softer than expected, but good morning. I don't think necessarily to the point where it's going to really spark any real concern. And I'd imagine the focal point is still kind of forward at this point to the Fed. Here you can see coming in at 0.6% retail sales month over month for the month of August, and it does look like they revised last month from 1.2 down to 0.9. You can see the revisions for the most part across the board a bit lower. Your thoughts initially?
Well, it's most important is looking at the market reaction, and it's holding, like you said. So everything comes back to the S&P for the macro barometer, in my opinion. And, the fact is, yesterday we had a bit of a bounce, and today we're getting some good follow-through. We're near the halfway point of this recent drop from the top. So that's very important. Every time we've seen a recovery above that midpoint, then we've moved up and made new highs. So it's really interesting the way the market's come back in the last couple of days. After Friday had some new month lows in the S&P. What was interesting is the VIX, the volatility. We saw a huge divergence, bullish divergence, in the fact that volatility did not make new relative highs and actually was lower than it was Thursday, lower than it was Wednesday, lower than it was Tuesday and Monday. So, the actual number, the VIX was showing less fear and less concern than we saw in the S&P price.
And that's kind of in many ways, we did see it elevated somewhat, but, what you were just talking about, again, I'm a big fan of Price is King. I would think that some of the pullback that we saw and the fact that it didn't become more severe and wasn't at a more rapid rate, I guess it was in many ways for the NASDAQ, but that was signaling that, again, it wasn't a major pullback, or it was just a bit of a pullback and it was a little bit more of corrective type rather than a shift in terms of some of the trend that we've been seeing. Would you agree?
Right, just needed, and it was needed. Now, Nasdaq is its own beast, its own animal. It was up 75%. It needed a heavy shakeout unwind so that it can consolidate and move higher. But we focus on the S&P as the barometer of the marketplace, and obviously that has a whole level of stability inside it, as opposed to the Nasdaq, which is going to be the Ferrari of the indexes, obviously. The way that the S&P behaved, I thought was very positive. And right now we're 5% away from the top. We're still up 5% on the year. And technically, I think it's held very well. Let's see what this next leg is, if we can get above the 3450 level and move positive. But as you talked about, when it comes to the policies of what's happening to support the stock market, let's remember that's the number one goal right now is to keep that stock market up. And it's all of government approach. They're going to do anything and everything. And you were talking about interest rates. Let's remember a year ago, we were all kind of dumbfounded by the independence of the Fed to make interest rate decision taken away from them and interest rates down to zero. That was a tectonic shift in the way that the free markets work here in America. And that's just one example. Look at now, the dollar is now below 93 again. So they're going to do anything and everything to fight that I don't think is a smart play.
Yeah, I fought the Fed once, and it didn't work very well. I remember it distinctly, Alan. Let's talk a little bit about what you're going to be listening for in terms of some of the comments, some of the question and answer, the back and forth today. A lot of focus on inflation and that line in the sand we've been talking about.
Yeah, I don't know why we keep thinking there's a line in the sand. There are really no lines anymore. I was reading this morning, somebody's figured out that we're not going to raise interest rates to 2024. So I'm not good with math, but that's not tomorrow. And so we talked about they're going to pull every lever they can. They're expanding the balance sheet. No one cares about the deficit. No one cares about anything anymore except supporting the stock market. Heck or high water. And let's focus on the dollar. The dollar needs to make another swing on those lows below 92. You're seeing the euro currency, back above the 119 level, see if it can take out that push above the 120. So, everything's moving according to oil right now. We're seeing gold move up. We're seeing we're seeing S&P move up. And we're also seeing oil start to come back to that 40 pivot. So, it's everything is moving in its in their longer term trends right now, and it's important to see that happen after we had a bit of an unwind. As a trader, it's always important to see how the markets react, not necessarily how they act.
Yeah, we were just talking about, as you mentioned, the dollar, the weakness there, how it's been buoying some of the commodity prices here. We're looking at it versus crude and gold. Also, it's helped the Trump administration, not only wanted those rates, as you were mentioning, the shift that we saw down to zero. They wanted lower rates. They also wanted a weaker dollar. They've gotten what they wanted. Basically, it's holding at these multi-year lows. Do we need to continue to see dollar weakness to continue to see strength in the indices, or are there other contributing factors, strength in the crude and strength in the gold, or are there other contributing factors here at play? Because ultimately, it's not the only fundamental catalyst here when you're talking about some of these products, Alan.
Yeah, that's true. I think I look at the gold and the crude as indicators that, of the support of the all assets moving higher. But I think, we are going to look to see how the dollar acts when it tests that low again, if and when it tests that low again. We're just stuck in a range between 92 and 94 right now with that 93 pivot. But everything is moving in a bullish favor. You've got the VIX down, the S&P up, the crude oil stabilizing after a bit of a failure here. So I think it's just as steady as she goes until proven otherwise. And I think you stated it properly. In the next 2 months, I guess it's 2 months until election, there's going to be nothing that you've got to. Again, I've used this phrase before. You've got to learn to listen, and when someone says something, you've got to believe them, and they're going to do anything to support the stock market, and there's not a lever that they won't pull. Let's see if there's some surprise stimulus. The market's kind of taken that out of the equation, but you never know. I mean, why not just send out a $500 check to everybody and write Donald Trump on it, and and say vote for me? I mean, nothing is impossible in this day and age.
Yeah, we're dealing with a neon swan type event, and it does seem like responses too have been somewhat out of the ordinary, but also necessary in many ways, I guess one could argue. Alan, great breakdown. Really appreciate you joining us here and giving us part of your Wednesday morning. Ladies and gentlemen, Alan Nuckman here to help us get ahead of the Fed, the chief market strategist at Agorna Financial. Always a pleasure. And now that we've had a look at some of the fundamentals, taking a look at the numbers here, Alan was talking about the significance in the U.S. dollar and some of the price activity there. Let's begin a look at the technicals with the greenback. Take a look at the /DX, ladies and gentlemen. This is a dollar index. You can